Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, January 9th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'll be at the desk all day. And yesterday, what I had to do, it was a real pain in the butt, if you know what I mean. So looking at the overnight markets here, a couple things that are going on here. One, you have the Chinese Futures Exchange. They're announcing an adjustment on the price limits and margin requirements for platinum and palladium futures starting on January 13th. So we'll monitor that, see if it has any kind of impact. When the news broke, didn't really see any kind of reaction in the markets, but you could see around the globe, different exchanges are trying to put some curbs on some of the speculation that's going on in the markets here, but it looks like futures are snapping back here overnight. You got that February gold up $20 at 44.81. That's up just under about 0.5%. You got silver up about 3.5% at 77.68. So nice snapback as well. It pulled back. I gave you the kind of the levels here, the $70 support level. You go up to about that 82, 83 level. You draw about a 50% Fibonacci retracement, and we bounced off about that level there, getting a little bit oversold. I think that that's kind of the first area of support. Below that would be that $70 mark, and we'd have to see how it trades on either side of that. Anything below that could extend that washout to 65, then 62, and then after that we would have to reassess things here. Otherwise, the bull trend looks fairly intact here. The second thing is that Rio Tinto is in talks to buy Glencore to create the world's biggest mining company here with a combined market value about $200 billion. So you expect to see more mergers and acquisitions here in the metals and mining space here, especially with prices coming up like this. We're seeing profitability, capex, things like that in the mining sector really starting to pick up. We do have a concentrated portfolio called Mining Alpha here at Blue Line Capital on that side that is available for our wealth management clients to potentially look at. Now on the precious metals, again, they are rising overnight. So gold and silver, they are headed for their biggest weekly gains as traders, they await the U.S. jobs data here for clues on the Federal Reserve next move on interest rates. Gold's appeal here this week really being reinforced by some of the geopolitical and globally geopolitical tensions here around the world with Japan and China, their trade relations. You also have the U.S. capture of Venezuela's leader. You've got some unrest going in Iran. You've got President Trump talking about a number of different things like Greenland, Cuba, Colombia, a lot of stuff going out there, a lot of moving parts here. So you got to keep your head on the swivel, but much of that has been reinforcing gold here and gold staying power, adding some structural support to it. Now, if you look at gold, that 14-day average true range, I just use that for volatility, just to measure kind of where we're at. You can adjust that too. If you see a sudden surge in volatility, you want to bring that forward, say maybe like the last 5 trading days of volatility to measure some of this risk. 14 days in this type of environment may be a bit too long, perhaps looking something like a 10-day volatility here and getting that type of average true range, at least for stop placement, risk management, things like that. When I first started in the business, oftentimes when we were trading the S&P 500 and it was much less volatile in the gold market, things like that, we were using some things like rule of thumb, like no more than 2% on a trade, no more than 2 times the average true range as far as your risk management. And then we would use whichever one was smaller of the two, and that's kind of how you'd play, and you'd have, many more times. Think about it like going all in at a roulette table or something like that. That's only gonna last so long before you blow up. And I see many people out there, they YOLO calls and things like that, and they keep rolling it up, and then eventually you get one little correction, and you bust out with the double green here, and then the party's over. So what you want to do is really be able to have that staying power in the market, and that's where really the risk management plays a paramount role, because looking back at many of the trades and things like that, it's a lot of times where you're gonna have bad trades, but as long as you can risk manage them properly and you can have dry powder on to the next one, what I don't like to see is where you get that Friday where it goes up $7 in thin trading, gaps higher on Sunday, people average up too high, market corrects down $10 on Monday here for whatever narrative they want to pick and choose that it is driving prices lower. But the reality is that they put the positions on, they grossed up too big, they failed to have a risk management. Remember, I always say plan your trade, trade your plan. So enough with that. The key level support on the gold market, 42.88. Silver, that average true range for 14 days, here's $4.55. The key level support, 69.92. Technically, the bulls want to see that close over 82.67 on rising volume and into the next session and really hold those gains. And that's where you're going to get the talks about $85.90, $100 silver will come back into play. And you look at the precious metal flows. Well, the ETFs, they're still buying gold. They added to palladium. They're still selling silver and still selling some platinum. So the gold ETFs rising 0.1%. Year to date, up 0.1%. They added about 88,000 troy ounces of gold holdings in their previous trading session. Fourth straight day of growth here in total gold rose 0.1% to 99.1 million ounces, the highest level since September 13, 2022. Gold advancing 3.7% this year, tacking on about 0.5% in the previous trading session. Now, silver, seeing a different picture here. I mean, it's really been a trading affair here, and a lot of trimming's been going on. So declining 0.1%. Yeah, year to date, ETF flows down 1.7%. So the ETFs, they cut about 509,000 troy ounces of silver holdings in the previous trading session in 5 straight days of declines. Now we have seen 5 straight days of rising in the palladium market. None of this is trade recommendations at all. This is just all observations and things like that. And it's really things that I send over to my coworkers here to keep them insights as far as what I'm seeing in these markets here and some observations. So you look at the gold silver ratio, again, just another observation, sitting at 57-1. Now you look at the macro markets and the equities, they are rising overnight. Actually, you've got copper rising as well, up about 11 cents here at 5.90. You do have platinum at 23.05, palladium at 19.24. So just a nice move across the board in these markets, but there are some risks in the metals here today here. You've always got the risks of potential profit taking, but then also you're going to have some economic data. And if you know me, I only really follow 2 major things when it comes to this market. I follow, and this comes across the board on any markets. It doesn't matter if it's grains, softs, treasury yields, things like that. All I do is I look at what the signal is giving me as far as technically, should you be long, short, bullish, bearish, neutral, and then also what's the economic data, what's the rate of change on the economic data, and how is that going to play into the market. So again, you're going to see those December non-farm payrolls and average hourly work earnings come out with the unemployment rate due out all at 7:30 a.m. Central Time. So if you're involved in the gold market, you're involved in the US dollar, currencies, 10-year treasury yields, the stock indices, you're all going to see those move quite a bit here, especially because we're getting those economic readings. Now, the rate cut expectations, they continue to decline with only about a 13.8% likelihood that the Fed will reduce rates 25 basis points at that January 28th meeting. You go over to March 18th, it's going to be about 36.6%. Now, after that comes out, we're going to have 3 Fed speakers come out. So you'll have Kashkari, Bostic, and also Barkin. They are going to speaking throughout the day here. A lot of times what they say, depending on if they are a voting member or not, is going to adjust some of these markets back and forth. You see the dollar index. Now, this is where things get interesting here, because this is really what could disrupt some of the party in the markets here. The dollar index gaining a bit of strength here. Some of that could be some flight to safety, geopolitical stuff like that. But the dollar index at 98.78, because we did see the Eurozone unemployment rate decline yesterday, and we saw a little bit of a pop in the euro currency, but it did sell off after that. So you look at the dollar breaking to a neutral trend. You look at the euro currency teetering on this bearish trend at 116.79. So it's really got to capture that 117 handle and start to turn up. We'll want to see a higher low on that chart. We'll want to see a lower high on the dollar index. And you look at 10-year treasury yields, just very complacent back and forth. 4.11 to 4.22%, sitting at about 4.18%. So resistance on the 10-year treasury futures sitting at about 113. That's a critical level there. Any kind of break there break above there would put those 10-year treasury yields back below 4%. You go to Bitcoin here. Bitcoin's been interesting. You had that big washout there. A lot of insiders, they know politicians trade a lot of Bitcoin, large countries and things like that are trading Bitcoin, and you got the people like when there's this unrest in Venezuela, they've got higher inflation. Suddenly, your president's been nabbed in the middle of the night. People are going to go into Bitcoin. That may be where we got that pop across the board, XRP, things like that, all popping up here because they want to get out of their currencies. They want to get out of other currencies, and they want to go into those types of things. And then as things die down, they tend to liquidate some of those positions. But the key level on Bitcoin that I'm looking, because it's steady right around like that 91,000, 90,500. It's really 93,675. A break above that, recapturing 95, really puts 100,000 back into the cards. A break below 86,300, you're probably going to see the most recent buyers in there start to capitulate, liquidate, and we can see some pressure on that market. The key level of support's right around $80,000. The S&P 500 gamma exposure sitting right in neutral territory here, so nothing really going on at the moment in the S&P. It's been quite quiet recently as far as volatility is concerned, because you look at that VIX sitting at 1651, just kind of anchored there. Now you go to Europe and Asia here. European stocks, they advance with mining shares amongst the biggest gainers out there. Asian stocks, they're fluctuating, but they're really waiting for U.S. economic data and then possible Supreme Court ruling on tariffs. That could play some volatility in the market. Not a lot of people talking about that from a volatility standpoint, but it's something that we just got to keep in the back of our minds that it could cause volatility. The MSCI Asia Pacific Index, it paired most of its yearly gains here, but remains on track for the best full week at the start of the year since 2023. So you guys got any questions you want to explore, opening up a futures trading account with us, getting things going on. There's a 1,000-ounce silver contract. There's all the way down to a 1-ounce gold contract. There's a 2,500-pound copper contract. So there are smaller contracts that are pure price plays. And with some of the volatility, I see a lot of trading in the evening, in the overnight sessions, on the Sunday night sessions, that you have that liquidity there where you don't get that on any of the ETFs and things like that. And then if you want to look at things like on Blue Line Capital, just shoot me an email here, shoot an email to info@bluelinefutures.com, and we can tell you how to get started. So remember that futures and option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.